Good evening, traders. I want to talk to you about trading rules. Um, the trading rules that I have are written down here. I'm going to share with you my trading rules, and this is just to give you an idea of some of the things that I think that are important to follow. You can make up your own set of trading rules. It's your money. You trade it any way you want to, with rules, without rules, anything you want. It's your responsibility. Okay, these are just the rules that I trade by, and I'll talk more about each one. The reason I set it there as we go through them. So, trading rules. The first one here is only trade from the hours of 4 a.m. to 1 p.m. Well, that's when the major Forex market action happens. At 4 a.m. in the morning, Eastern Time, that's when the London market opens. London's the largest Forex market in the world. Until around noon, London will be closed, but the New York market is still open. But about 1 o'clock, the New York market starts slowing down. Now, some days it doesn't slow down to about 2 o'clock, but I try to be done by 1. And the reason I try to be done by 1 is okay, I'm done. I have the rest of my day not to worry about it. Okay? And that's when the major action happens, is between 4 and 1. So that's the times that I trade. If I get into a trade, say at 12:30, I'll set my closing price for the trade. It might not close out to 2 or 3, or it might even close out at 2 o'clock in the morning. But I try to get away from the computer screen, take a break, get away from it, and think of other things. I only trade the major markets. Now, there's two schools of thought here. The major markets, what I trade, are the ones that trade a lot of volume. They have the closest bid-ask spreads, and in some cases, they probably don't move as much. So there's not as much movement, not as much opportunity. Some other traders say, hey, I want to trade these markets where they move a lot. Well, those are more volatile. And when they're more volatile, they tend to have wider spreads. So, if you go long a certain pair and it's got a 7 pip spread, so you're automatically down 7 pips the minute you enter the trade, whether you're long or short. And then if it turns around and goes, say, 10 pips against you, well, now you're down 17 pips. And, if you're trading a one lot where it's $10 a pip and you're down 17 pips, you're down $170. So I don't like to trade those. Okay. Now this is one I think everybody's going to be interested in. Do not close out trades for a loss. Early in my career, trading Forex, I would, get into a trade. Let's say I bought long and it went down a pip or two. Well, I didn't get nervous over a pip or two. Well, it went down 3 or 4 and I'm still not nervous. Now I got down maybe 10 pips, and the losses are starting to pile up. It's starting to make some dollars disappear out of my account. So I would close them out. I'd say, okay, that's it. I'm cutting my losses. And I can't tell you how many times the minute you close the trade out, within 5 minutes the market rebounds. Okay? Maybe it's just my luck or lack thereof it. But we'll talk more about how to not close out a trade for a loss later. And maybe in my next video we'll start getting into some depth of this. Only put up half of your account balance. Now, when you trade Forex, you're trading, you're borrowing money. You're trading on leverage, and most common denominating leverage is 50 to 1. So basically, for every dollar you're putting up, you're controlling $50 of product. So if you're trading a one lot in the Euro US currency pair, you're going to put up about $2,700. Okay, but that's going to control 100,000 euros. Okay, and each pip is $10. So if you, let's just say, for example, you've got a $10,000 account. All right. So you go in there and put up a one lot and you put up $2,700. Well, the thing starts moving against you. price starts going down, and you say, well, hey, it's going down. It's cheaper than it was when I bought it a little while ago. I'm gonna buy me another lot. So now you got $5,400 tied up. Well, it goes down a little bit more, and you say, well, you know what? It's cheaper than it ever has been. I'm gonna put up another lot. So now you got about $8,100 tied up. Well, now you only got $1,900 on the side, and you've got 3 lots. Your account's changing $30 a pip. So what I say is only put up half of your account, and that way, you know, if you go in, for example, let's back up to the 1 lot. If your account balance was, say, $2,800, and you bought a 1 lot on the Euro US, and you put up 27 out of the 2,800. Now and you can do that. Your broker's going to allow you to do that. But it's $10 a pip. Well, you're going to lose a pip, say, on the bid-ask spread. So you're down $10 right then. Okay? So now you've only got $90 to spare. Well, if the trade goes 9 pips against you, and now all of a sudden you're $90, you don't have any more money to cover the loss, your broker's going to close it out for you automatically. So if you're only putting up half of your account balance is the maximum, and I'm not saying you should come out and the first trade of the day you put up half of it. That's what they call blowing the account up. You come in here with, say, you know, $1,000, and the first trade of the day you say, well, how many of these Euro US dollars lots can I buy for $1,000? And you buy the maximum, and it moves against you, and you get sold out. The broker will close your account right then and there. He'll close that trade, and you might free up $850. You've lost $150. You do that 3 or 4 times, and your account balance is down to nothing. So do not do that. Only put up half if you're into about your 8th or 10th lot to try to correct a losing trade. And we're going to go into more of that in depth later. But do not overtrade. That is probably one of the biggest mistakes that a new trader makes. He comes in here and he thinks that anybody can do this. All I got to do is buy and it goes up, or sell and it's going to go down. And I'm going to be driving a new Corvette next week, and next thing you know, his account's blowed up. He has no money left in the account to trade. So don't do that. Trade small. Trade small. What I say, trade small and trade often. Make many small trades. That's what I do. Are there people out here making a lot more money at doing this than I am? Certainly. I am by far not the one making the most money in the Forex market. But I would rather make a small win than any loss. Think about that. Okay? So, hope you learned something from this video, and look forward to the next one.